Welcome to Talk Tickers. Today, we're diving deep into the latest numbers from Brown-Forman. Yep, the folks behind Jack Daniels, to figure out what their quarter really tells us about where the global consumer is at. Man, the market's reaction to this report was a total roller coaster. On earnings day, the stock shot up over 4% in what looked like a big relief rally. But then it did a complete 180 and ended the day down over 1%. What a ride. You know, that kind of whiplash action tells you there's a real tug of war happening in the numbers. So what was Wall Street so excited about? And then what spooked them? Let's get into it and unpack the whole thing. Okay, so right off the bat, the headline numbers were confusing. They basically sent two completely different messages to investors, which is where all the drama started. So on one hand, you had a revenue beat. The company sold more stuff than analysts expected, and that's almost certainly what caused that first jump in the stock. But on the other hand, they missed on earnings per share. That's a big red flag that their profitability is getting squeezed. But here's where the real story is. Just look at those year-over-year changes. A 14% drop in earnings, an almost 10% fall in operating income. That points to a serious problem. Even though they squeaked by on sales, it's costing them a whole lot more to make those sales. That's a classic case of margin compression, and that's what sent a shiver down the market's spine. So where is all this pressure coming from? Well, when you start to peel back the layers of the report, you see a company that's pretty much living in two different worlds at the exact same time. And this chart just lays it all out perfectly. I mean, look at this. Emerging markets like Brazil and Mexico are absolutely on fire, up 12%. But then you look at developed places like the US and Europe, and they're down 6%. It's a tale of two economies, where one consumer is spending and the other is really feeling the pinch. And you know what? It's the same story with their actual products. Ready-to-drink stuff is the clear growth engine right now, but their bread and butter, whiskey, is totally flat. Tequila's even shrinking a bit. And then you get to this wild number. Used barrel sales collapsed by 61%. I know, it sounds like a weird detail, but it's a real business for them, and that is a massive, massive drag on profits. And these two issues are absolutely key to understanding the quarter. You've got this Canadian trade dispute that has just decimated that market for them for now, and then there's that slowdown in demand for used barrels from other distillers, which is a direct hit to a nice, profitable side hustle for them. These aren't just your typical headwinds, they're like a giant anchor on the results. Okay, so things are tricky. How is management playing it? Well, they're not just sitting back and watching. They are deep in a major strategic reset to try and navigate all these challenges. On the earnings call, they laid out a pretty clear three-part plan. First, they're totally revamping how they get their booze to you in the United States. Second, they're cutting costs by restructuring their workforce. And third, they're leaning hard into innovation. Think new flavors like that Jack Daniels Tennessee Blackberry that's been a hit. And the message from the CEO was all about calm and control. He basically said, look, none of this is a surprise. The quarter played out pretty much how we expected, and we're sticking to our full-year guidance. That confidence is exactly what the market wanted to hear, and it's a big part of why the stock initially popped. So you've got a messy quarter, a confident management team, and a stock that can't make up its mind. What does it all mean for the future? Well, here's our verdict. It's time for the next call. You can really see the battle lines drawn for this stock. The bulls are going to point to improving gross margins, the strength in ready-to-drink, and the fact that the company is still returning tons of cash to shareholders. But the bears are going to say not so fast. They see a weak consumer and these massive specific headwinds from Canada and the barrel market that are just crushing profits. So, after weighing both sides of the argument, where do we land? We're initiating our coverage with a market perform rating. And here's why. Look, management is doing a solid job navigating a really tough situation, but the external pressures are just too powerful right now, and consumer demand is still pretty soft. Until we see a clear catalyst that can change that story, we think the stock is pretty fairly valued. It'll likely just move with the rest of the market. All right, that brings us to our final segment, our outrageous but plausible trade idea. The biggest wild card out there is definitely that Canadian trade issue. A resolution is what you'd call a binary event. It's either a problem or it's not. If they reach a deal, that headwind disappears overnight, and you could see a serious relief rally in the stock. So this trade is really a bet on politics, that a deal gets done and unlocks that value. And of course, our final reminder, this is not financial advice.